Welcome back to Morning Markets on Wednesday, the 18th of January. Some positive developments to bring to life for you this morning. First one, further evidence of headline inflation easing in Europe, primarily Germany, and also in the UK as reported this morning. The second aspect is some context for how the policy developments within China are set to pave way for stronger economic growth as we look into 2023. Just to build out the first point, yesterday we had inflation data from Germany, which highlighted between November and December, inflation continued to ease. Headline inflation was 8.6% in December. If we compare that to November, that was 10%. So you're seeing quite a significant moderation in terms of headline inflation. This was largely driven by easing of the cost of goods. So for context, the cost of goods rose 13.9%. So you're still seeing strong price increases there, but relative to 17.1% in November. So that price increase pace is starting to ease at this point. We do continue to see upward pressure on services and also rental costs across Germany. The latter component is likely to keep German and European inflation above the 2 to 3% target across Europe for some time. This morning, we also received inflation data from the UK, which showed that headline inflation continued to moderate in December to a level of 10.5%. That's down from a level of 10.7% in November. This was in line with the market expectations. Month on month, you are still seeing modest increases there, increased 0.4% on the month. The biggest factors which were contributing to inflation actually cooling was primarily transport, but also fuel costs as well. So for context there, the average price of petrol fell by 8.3 pence per litre over the month. We also saw the price of goods starting to ease in terms of the price change. So still seeing upward pressure, but the rate of change is starting to ease. So for context, price of goods was up 6.5% relative to 7.2% in the month of November. Services, including leisure, restaurant, bars, hospitality, the sort of areas which we've been discussing here on Morning Markets, continue to push higher. So prices up 11.3% relative to 10.2% in November. So again, it's that latter component, it's the services aspect which is still putting upward pressure on headline inflation prints. Core inflation, which strips out the more volatile components of food and energy, remained unchanged at 6.3%. And I think this really demonstrates the stickiness of that core aspect and the challenge which central bankers have on their hands at this point in time to bring inflation towards those 2% targets. For context, the moderation in headline inflation is a key positive development to take away. At this point, in terms of central bank expectations, the Bank of England's expected to take interest rates around 1% higher than their current levels, so a level of around 4.5% through the summer of 2023, and actually hold that interest rate through the course of 2023 until they get stronger signals that they're actually moving closer to that 2 to 3% target. Through the course of January, we've also been providing developments in terms of China and their policy around COVID-19, which for the last 3 years has been extremely tight. What we've seen is the government start to ease their restrictions in terms of domestic and international travel, and also their grip on the property developers. So the developments that we've seen have essentially allowed property developers to take on more debt in order to fund their infrastructure projects. Yesterday, we received data which demonstrated that China in 2022, as we expected, did miss their economic growth target. Their economic growth target is 5.5%. Economic growth through the course of 2022 came in at 3%, so significantly behind target. This was the slowest pace of economic growth since the 1970s. So the developments that we're seeing in China have got the expectation to pave way for a stronger economic growth outlook as we look into 2023. That's all for this morning. Thank you very much for watching, and please do tune in tomorrow here on Morning Markets.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.